Hello and welcome to NDTV Profit. You're watching IPO Adda, and my company in focus this time is Ceigall India. It's infrastructure construction company with a large exposure to construction of roads and highways and flyovers across northern India and Maharashtra. And joining me is Mr. Ramneek Ceigall, who is the managing director of the company, and Mr. Bhagat Singh, who is the group CFO of the company. The company's IPO is opening on August 1st, price between 380 to 401. It has a fresh issue of 684 crores and a OFS of 568 crores, so 1252 crores IPO, giving the company a market value of 6,985 at the upper end of the price band. Gentlemen, thank you for joining us on NDTV Profit. Mr. Sehgal, my first question to you, you're raising roughly 1252 crores, which comprises of 684 crores of primary issuances. Give us an idea of your business model. Where are you going to use this money?
So first of all, thank you so much for having us over. And I'll start with a little brief how we started and what is the business model. So started from a very small city, Ludhiana, and I always feel proud to be born and brought up in Ludhiana. There's something in the water of the city. We have great entrepreneurs from that city, and started from city roads to other district roads, major district roads, then state highways, national highways. We did about industrial parks, focal points, transport, nagar. Then we did grain markets. From there, we entered into national highway in 2013. From there, 2018-19, we entered into HAM projects. Then we were doing specialized structures. So structures, if you talk about, we have completed one of the longest 6-lane elevated of the country, which is Delhi-Saharanpur, 11.24 kilometers is a viaduct portion. And we are currently doing one of the longest 4-lane elevated of the country, which is in Bihar. And we're doing one bridge over Kosi. So we're doing 2 metros in Kanpur and Agra. So if you talk about Ceigall, whatever comes on the road, we build it. Be it highways, expressways, elevated roads, underpasses, anything related to railway. We do railways work also, we do runways also. Besides this, we are into metro and tunneling business as well.
You're raising nearly 684 crores in fresh issue. How are you going to use that proceed?
Correct. So, good morning and thank you for inviting us here. And as far as the primary issuance of 684 is concerned, so the company would be deploying close to 99 crores for the purchase of the machineries, which would be utilized towards the further modernization of existing plants. And 412 crores approximately would be utilized towards the repayment of its existing debt, that is a long-term and a short-term WCDL, and the remaining amount pertains to the general corporate purpose. So this is a brief detail about the 684 crores of the primary issuance which the company is raising.
Give me a sense of what is the kind of borrowing that you have on your balance sheet as we speak, and how much it will reduce by.
So approximately the total borrowings that we are having on a standalone basis as we speak is 1259 crores. It comprises of the working capital limits, and it also comprises of the term loans which the company would be raising. Out of this standalone total debt of 1259 crores, the company would be repaying total 413 crores of a debt, which comprises of 150 of a short-term crores debt, and the remaining is a long-term debt which the company would be paying. And the resultant of this repayment would be the saving of the interest cost and the long-term repayment amount.
Mr. Sehgal, you are into multifacets within the infrastructure space. Give me a sense of your expansion plan there. NHAI being one of the largest project suppliers to you, 80% of your revenues come from NHAI. How has been the tendering program for NHAI in FY25, and what kind of orders that can be expected?
So we already started metro a few months back, and I said very clearly that whatever comes on road, we build it. So it could be structures, it could be highways, it could be perpetual payments, it could be elevated roads, or it could be tunnel. And besides this, we do utility shifting, which is anything comes on the road, we shift it, be it water, sewerage, or any utility shifting. So even electrical also. So we have added a solar in our forte, where we've already got 3 solar plants at 3 different project sites. So, as a company is growing, gradually the verticals are also growing. We're not only growing geography-wise, we are growing vertical-wise also. And we are very open to do EPC, anything related to our business. So, expanding in these verticals, and if you see how we are different from others, they have started these new verticals when they touch the turnover of 7,000-8,000 crore. Whereas in our case, we started doing it when we were at 2,000 crore. So, we are very blessed in that we already have so many verticals in our company. We are doing a runway at Halwara. So, airport is going to be the booming thing. Railway is going to be booming. We're already in the railway sector. We've already, bidded close to $2 billion in different areas. And, we've quoted for something like a sewage treatment plant, which is one of the largest sewage treatment plant. We've quoted for one of the longest metro project, which is in Agra. So going forward, I don't think there will be any dearth of the work. There's so much work, and we have so many verticals, and geography-wise also, we are already present in more than 10 states, and we have delivered all our projects before time. We've got bonuses in 3 projects already, 7 projects already early completed. So, the plan is very clear, and this is just going to be the start of a new journey. Thank you.
Give me a sense, sir, your book to, you had a order book of more than 9,000 crores, 9,470 crores at the end of June 30th. You had a book to bill ratio of 3. Is that the kind of ratio that you would like to maintain going forward, or there going to be some moderation in the book to bill ratio as you increase your turnover?
So, of course, for a company like us, getting order book value is not a difficulty. If you see in last 3 years, we had a great order book value, and going forward, the plan is the same for the company. And, we have so many verticals, getting order book is not a challenge at all. We already had a very good, plan for next 3 years. You can see order book values there.
Mr. Singh, Mr. Ceigall says that, order book is not an issue, but execution is a bigger one, because you need cash generation from operation to ensure that execution comes to play. Your net cash from operations have been negative. So can you give us an idea of how your cash generation from operations will look like, or how you plan to improve them going forward?
Sure, sir. So, sir, my first statement, the first reply to a query is that my cash flow from operations is negative. What we are watching is on a console basis. So, I'll give you a detailed reply on this. My cash flow from operation on a standalone basis in Ceigall India Limited, which is a parent company and which is executing the EPC work on a consistent EBITDA margins, that is positive. That is on year-to-year basis. And when we consolidate the cash flow from operations on aggregate basis, in that case, we consolidate the cash flow from operations of the parent company, that is Ceigall India company, along with its HAM projects. So we have HAM projects also, which are into operations. Under the HAM projects, whatever is the total bid project cost, 40% is paid to us during the 2 years of the execution period. Remaining 60% is paid to us over a period of 15 years period. As per the accounting treatment, that 60% of the amount which is receivable by the SPV from the National Highway Authority of India, that is being shown as a debtor receivable under the concessional agreement. On account of the 60% amount which is classified as a debtor receivable from concession agreement, the cash flow from operations on a consolidated basis went negative. So it is on account of the accounting treatment and the model of a HAM project that the consolidated basis cash flow from operations are negative. But if we see the cash flow generation capacity of the parent company on year-to-year basis, we will find that the cash flow from operations are positive. Thank you.
I'll just add something here.
Yeah.
So our first HAM we completed in 8 months ahead of schedule, and it's AAA rated by CRISIL. So we've got a bonus also of about 15.7 crores in the first quarter. So second HAM is getting completed. We've already done more than 80% work in less than a year's time. So in coming quarter we are likely to complete that project also. And all our working HAM projects are A- by CRISIL, and company is already A+. So, cash pool is great in the company, and last year we have a ROE of 33%, CAGR of 50%. So we are one of the fastest growing company that has been voted by the CARE Industry Report. That's very much available everywhere, and is part of our DRHP also. Thank you.
You are also in executing 18 ongoing projects. What is the timeline for them, and the cash flows coming in from those projects as and when those get completed?
So can you repeat the question, please?
I'm thinking you're undertaking 18 ongoing projects. So what is the kind of cash flow that you expect from those ongoing projects? When do you expect them to be completed?
So all our projects are ahead of schedule. We are getting the payments on time, and every month payment bill is produced by end of the month after 31st. Our systems are very clear. Every day we submit a DPR, and on DPR basis the bills are submitted, RFIs are generated accordingly on daily basis. So in first 10 days we get about 90% from NHI. The rest of the 10% comes in a month's time. So there is no, the cash flow is so easy. The cash flow, there is no dirt. And secondly, in HAM projects, it's been 40% been paid by NHI during construction, and as 60% has been paid to us in 15 years to equal installments yearly basis. So there is no dirt of cash coming, and the cash accrual is great. Thank you.
Mm-hmm. Mr. Singh, can you give us a sense of your margins?
I'll just add one more thing.
Yes.
We had a great cash. We had a great cash accrual. That's the reason. We've already put about more than 230 crores equity in our existing HAM portfolio. And the first project is already completed where our equity is close to 99 crores. Second is about 84 crores. Third, we've put more than 45 crores. So this cash is getting generated quarter on quarter, and there is no. That's the reason we are getting into HAM, because our IRR is getting better if we get it in FDR, where post-tax the return would be like 5%, and whereas in equity IRR we're getting on our existing HAM is around 20%. Thank you.
What is the kind of cash requirement in the future for infusion into various SPVs? I mean, equity in form of equity. Is there a do you have an idea of how much of equity is required to be infused in many of the SPVs that you have?
So for existing projects, it's close to 900 crores, 230 already infused, and this 900 crores we have to infuse in the next 3 years. So like the project starts, we infuse, and then it gets going according to the project progress, and we don't have any problem. Last year also our PAT at the company level was about 278 crores. So the targets are great this year also. So I mean, it's a very easyable job, and the board decided this very clearly. It's not like a single person taking a call. It's about the board, and the board makes it very clear that this much a percentage we have to do HAM according to the effective cash coming into the as a cash accrual from the existing works.
And so just to add what Ramneek sir just mentioned, so as far as the whatever equity we need to infuse, so as per the HAM model or as per the banks, the total 900 is required to be infused, 230 we have already infused. The remaining amount need to be infused in line with the appointed dates of the new projects, and as per the bank sanction, 50% needs to be infused at the time when the appointed date was issued, and remaining amount of 50% would be issued in line with the capital requirement.
And one more thing I'll add here, for our completing project, we can anytime raise money. We can get a top up, we can raise NCD bonds because it's already AAA rated, and we can also sell it to the market. We can get units in InvIT. So we have multiple choices to even raise money against the existing projects also. So there is no dearth of cash accruals or money getting it from the existing projects also.
So just
and we've been very conservative. We plan things in such a way that yeah, please.
So just to get a sense of this, you will generate enough cash from your operations to infuse further equity into various SPVs as per your timeline, right?
Correct.
Okay. Give me a sense of your margins, because EBITDA margins were around 17% for FY24. They have gone up from FY23, but is 17% range that you're working with, or there is enough levers for you to increase that margins to closer to 20-22%? Mr. Singh?
Yeah.
So sir, as far as the margins are, yeah, please. So as far the margins are concerned, so in the past the margins have been in the range of 14 to 17% of the line, which includes the other income also. As far as the execution is concerned, so while bidding the projects, the company bids the project keeping in mind the targeted return, double-digit EBITDA margins returns. So the same would be continuing as far as the projects are concerned.
Mrs. Sehgal, you are, you said that you have you have bid for nearly $2 billion of projects. When do you expect them to, to open all those? When do you expect the projects to open up? And what has been your success rate on bid to, bid to achieve kind of success rate?
So we have bid close to the $2 billion, but these tenders get opened after the technical evaluation. Each department takes its own time, and it's getting opened every week, fortnightly also. And we are just clear about our EBITDA levels. So we don't have any pressure of creating an order book value. You can already see we have a great order book value. So we bid more, and strike rate is also not a pressure on us, because what we have to add, it's easily be scalable. And we just have one thing in our mind, that we have to get our EBITDA margins for every bid. Thank you.
That's good to hear that. Mr. Ceigall and Mr. Singh, it was a pleasure talking to you on NDTV Profit, and thank you for coming on IPO Adda. Your IPO is opening on August 1st. Price between 380 to 401. Fresh issue of 684 crores and OFS of 568 crores. Total IPO size of 1252 crores, and that gives you a market value of little over 6,985 crores at the upper end of the band. Thank you for joining us today.
Pleasure is all ours. Thank you so much for having us over.
Thank you. Thank you, sir.
Thank you so much. Thank you.